This is the ultimate showdown between gold and Bitcoin. Which is the better money? Which is the better store of value? And which money, is it gold? Is it which commodity checks all the boxes when it comes to perfect money? That's what we are going to see in this video. I know that Peter Schiff might not like it, or Peter Schiff fans as well, although I'm one of them. I appreciate Peter Schiff. He got me into economics, I mean, amongst other people, but Peter Schiff was one of the main economists that I enjoyed listening to and learning from. But of course, I disagree with him when it comes to Bitcoin, as many other Bitcoiners do, I believe. So, today we're going to talk about Bitcoin versus gold, and we're going to go through all the pros and cons of each one of them. So, the first thing is the history. Of course, gold has the longest history. I mean, it's been the money since immemorial. Mises also says this in many of his books. It has 5,000 years of history. It's been used in every country, in every culture, by every civilization. Pretty much gold was the money that was selected by every group of people everywhere across history. So gold has a long history, of course, that's obvious. Bitcoin has less than 2 decades. I mean, it's only been around for 15 years or 16 years now. But, I wouldn't hold this against Bitcoin because despite the short history of Bitcoin, it has shown great resilience and great success despite the short history. And it's been the dominant cryptocurrency since its inception. I mean, it's the first cryptocurrency. It has the advantage of what's it called, the first mover advantage. Yeah, it has the first mover advantage, and it's been growing both in market cap and in adoption. And the market cap of Bitcoin has been on the rise. The adoption of Bitcoin has been on the rise. Now it's being adopted at the institutional level. So, although the history is short, but it's quite interesting and it's quite substantial. And like I've said, I wouldn't hold it against Bitcoin. So yeah, gold has a long history, but Bitcoin also has an interesting and a successful short history. So volatility. Now, gold, of course, has low volatility. People use it to hedge against inflation. If you want to preserve the value of your capital, of your savings, you buy gold. Bitcoin has high volatility, but still, despite the high volatility of Bitcoin, which you can see here, I mean, it goes up and down, it's quite volatile. But I think that's not a bad thing in itself, because if you buy Bitcoin, you shouldn't buy it to make quick profits or to make quick money. When you buy Bitcoin, you buy it with the intention to hold it or to hodl it for at least 4 years or more. So all these fluctuations of Bitcoin, all this up and down, all this extreme volatility shouldn't bother you at all. In fact, you should be thankful that it's volatile because, I mean, last time I checked today, Bitcoin is trading around $84,000. And as you guys know, just last year it went up all the way up to $109,000. So you get to buy Bitcoin at a discount when it goes down. And of course, volatility shakes weak hands. I mean, people who do not believe in Bitcoin, or I should rather say people who didn't do their homework when it comes to understanding Bitcoin, they will sell it easily. They will not hold it with conviction. And that's your opportunity to buy it from them and to make money in the future. So, if you think about it, Bitcoin volatility rewards smart people. It rewards people who have done their homework. So, it rewards good behavior. You are always going to buy at a discount when people are selling, when people are freaking out. And why they are freaking out? Because they don't have conviction. And why they don't have conviction? Because they didn't do their homework and they didn't study Bitcoin and they don't understand it and they don't have a long-term vision for what Bitcoin, for the potential of Bitcoin, for the future potential of Bitcoin. So yeah, I don't see volatility as a negative thing. In fact, As they say, it's a feature, not a bug. So you should take advantage of volatility and buy Bitcoin whenever it goes down and whenever it dips. Like I said, it's $84,000 today. I wish it would dip further. I wish it would dip to 50 or 40 or 20. Although I don't think it's gonna do so, but I wish it would do that so I can buy even more at a great discount. But unfortunately, I don't think it's gonna dip that further. That ship has sailed a long time ago. So yeah, yes, gold is not volatile. It's kind of boring to be honest, but Bitcoin is interesting. Bitcoin is volatile. Bitcoin gives you the chance to buy it at a discount. So I think this volatility should be a point for Bitcoin, not a minus. So risk and returns. Now, as we know, gold is low risk but also low return, whereas Bitcoin is supposed to be high risk, although I don't think so. That's why I put it in parentheses. And high return. It is high return. It's been the best performing asset for the past decade. And people who say high risk, they don't understand Bitcoin. Bitcoin is the most certain thing in the financial world right now. Sure, there might be some black swan risk that we can't even conceive of or know, but for now, I don't see any risk with Bitcoin. In fact, it's the most risk-free asset you can buy and you can invest in. So, like I've said, Bitcoin's returns are extremely, like I've said, it's the best performing assets in the past decade. So, as you can see here, we have the average annualized return for the past 5 years, for the last 5 years. For Bitcoin, it's been 61.5%. For gold, it's 12.2%. And the total return for Bitcoin for the past 5 years, it's 997.9%. For gold, it's 77.5%. And for the last 10 years for Bitcoin, it's 47,116.2%. For gold, it's 123. So Bitcoin clearly outperformed gold by an order of a magnitude. So there is no comparison really. Bitcoin is less riskier. I don't think it's high risk. That's why I put it like this, high risk. And it's extremely profitable. It has high return. It's really good. But again, if you're not comfortable with Bitcoin because you haven't done your homework yet, like I've said in my Nassim Talib video, you can you can adopt the barbell strategy when it comes to investment. You can allocate 90% of your portfolio into what you think is a safe asset, although I think that's Bitcoin. But let's say you want to allocate it to stocks or to gold or whatever, or the S&P 500 or whatever. And then you can put 10% into Bitcoin and see how it's gonna do for you. But if you do your homework and if you watch enough of my videos in this channel, maybe you will be convinced that Bitcoin is not high risk, and maybe you will put everything in Bitcoin and be a total Bitcoin maximalist, Bitcoin investor. You're not even gonna bother with gold or stocks or S&P 500 or any of these things. So it's all Bitcoin. So yeah, so when it comes to government control, of course, gold is under government control. Gold is controlled by central banks everywhere around the world. Bitcoin is not under government control and it cannot be controlled by the government. Sure, they might regulate how you can access the Bitcoin, how you can buy it, or they might tax it, or all of these things, but they can't really control the Bitcoin. They have no control over the supply. They have no control over the issuance. They have no control over anything when it comes to Bitcoin. All they can do is tax it, regulate it, perhaps even ban it. And even if it's banned, you can still get it and you can still buy Bitcoin through various ways. And of course, if you have it, if you custody in your own cold wallet, then nobody can take it away from you. And if if you do if you have good safety practices and you know how to safeguard your private keys and you know how to handle your cold wallet, then no government can take it from you. So yeah, gold is controlled by the government. Bitcoin is not. It's not controlled by the government. Fungibility, I think it's the same for gold and Bitcoin. A piece of gold is a piece of gold. One Bitcoin is one Bitcoin everywhere you go. So both of them are fungible. I think that's similar for both of them. Ease of confiscation. Gold is easy to confiscate. Bitcoin is not easy to confiscate. It's extremely difficult to confiscate because there are various ways with which you can protect your Bitcoin. There are multi-sig solutions. There are ways with which you can safeguard your private keys. So it's not easy to confiscate at all because it's not tangible. Bitcoin is intangible. Gold is tangible. You can break into someone's house and steal their gold, or like what happened in various periods in history in the Soviet Union in the 20s and 30s. The Soviet, like the Bolsheviks, they seized gold from citizens and churches in the US in 1933 with the Executive Order 6102, in Italy in 1935, in France in 1936. So gold has been confiscated since forever. I mean, it's easy to confiscate, it's easy to steal, and it's easy to get into. So I think Bitcoin wins clearly when it comes to the ease of confiscation. Scarcity. Well, gold is scarce, but still the supply is not totally capped. The supply of gold increases but by 1.5 to 2% a year, and you never know what's gonna happen. Maybe they will find gold somewhere, and then the supply will increase by more than 2%. The beauty of Bitcoin is that it's the only asset that is scarce in absolute terms. In other words, the supply is capped at 21 million Bitcoins forever, and it's encoded in the protocol, so it cannot change. It's completely unchangeable. And I don't think there has ever been anything like this throughout history. There has never been a commodity that is totally capped. So Bitcoin is quite unique in the history of mankind because it's the ultimate scarce asset that you can own. It's the ultimate scarce asset. Bitcoin, there will never ever be more than 21 million. So Bitcoin wins when it comes to scarcity. So yeah, Bitcoin has absolute scarcity. The supply is capped at 21 million. Gold is not. Of course, as you can see, we have here the Bitcoin issuance schedule. As you can see, the Bitcoin supply increases over time, and there are the halving events each 4 years. It started since 2009, and each 4 years, the rewards for mining gets halved. So as you can see, the first 4 years, you get 50 Bitcoins as a reward for mining the blocks, and after the first halving, it halves into 25 Bitcoin, and then 12.5, and then 6.25, and so on until it stops completely. So the inflation rate will go to zero eventually. As you can see, Bitcoin halving schedule from start to 1 Satoshi. So the year it started in 2012, the halving was, it went from 50 Bitcoin to 25. And it will continue until 2136. The miners will only get 0.000001 Satoshi. And after that, after 2140, there will be no rewards for mining at all. There will be zero Bitcoin. And that's going to be in 2140. So yeah, as you can see, the halving schedule as well as the issuance schedule is completely controlled, and it's completely it's completely fixed. It can't be changed. So this makes Bitcoin extremely valuable because it's the only scarce asset in the world, in history also. So here I have this table with traits of money, and we compare here gold versus fiat money, especially the dollar, and crypto. I don't really like to call Bitcoin crypto because, Crypto is associated with rug pulls and scammers and all of this stuff, and Bitcoin is the exact opposite of that. So I don't really like to call it crypto. I like to call it Bitcoin, and we have to make a distinction between Bitcoin and crypto. So like we've said before, fungible as in interchangeable. Gold is fungible. The dollar is also fungible. Bitcoin is the same. Non-consumable. Now, what is non-consumable? As in when you spend the gold, or when you spend the Bitcoin, or when you spend the dollar, it's not destroyed, or it's not depleted, or it doesn't disappear. So it's not consumable. For example, if you have a piece of cake and you use it, and what's the use case of a piece of cake? The use case is to eat it. So when you eat it, it's gone. There is no more piece of cake. So it's a consumable good. With Bitcoin and gold, they are not consumable, so they stay. Okay, so all of them are non-consumable. Non-consumable. Portability. Now, gold is moderate because it's not easy actually to transfer gold from place to place physically in space. Actually, fiat money is easier because also most of the fiat money is digital. It's just numbers on a screen, same as Bitcoin. So both Bitcoin and fiat money, they are high in terms of portability, but gold is just moderate. Yes, I mean, you can people back in the day, they used to have gold coins that they can pay and take them with them, but still it's not as portable as Bitcoin and fiat money. Durable, of course, gold has been around for thousands of years. Fiat money is definitely not durable. It keeps inflating, it keeps depreciating until it goes to zero. Bitcoin is durable. Of course, Bitcoin doesn't have a long history, but it is durable. It is robust. It is anti-fragile. The longer the network survives, the stronger it gets. And if you think about it, Bitcoin is the ultimate bounty. I mean, it's worth $2 trillion, and if anyone can hack into the network and get it, they would have done it a long time ago. So it's completely incorruptible, immutable, and of course durable. So Bitcoin is also durable, highly divisible. I think Bitcoin wins here. The win goes for Bitcoin. Bitcoin is highly divisible. Fiat money is not that highly divisible. Same as gold, because as you can see here, I have this graph that shows that one Satoshi equals 0.000001 Bitcoin. 10 Satoshis, 100. One Bitcoin equals 100 million Satoshi. So in other words, you can divide a Bitcoin into 100 million Satoshi. So Bitcoin is highly divisible, okay? Bitcoin is highly divisible compared to gold and fiat money. Secure, cannot be counterfeited. Gold, I mean, it can be counterfeited. I mean, gold coins, they've been the base. I mean, they add some non-precious metals to gold coins to debase them. It can also be faked. I mean, if you don't recognize it, but it can be faked. But I mean, they can detect it, but you get my point. Fiat is also, it is secure, but it can also be counterfeited. Bitcoin, you can't. It's impossible to counterfeit Bitcoin. So it also wins this round of security. Easily transactable. Easily transactable. Gold is not. It's not easy to transact with it. Fiat, it's easy to transact with it. Bitcoin with the Lightning Network is also easy to transact with. Scarce, predictable supply. Gold is moderate, it is scarce, although the supply still increases each year by 1.5 to 2%. Fiat, it's absolutely not scarce. They print trillions of dollars each year. Bitcoin is the ultimate scarce asset, so it wins. Sovereign, government issued. Gold is not issued by the government, of course. Fiat is issued by the government. Bitcoin is not issued by any central authority, any government. So yeah, Bitcoin is not government issued, and as well as gold. Decentralized, of course, gold is not decentralized. It's extremely centralized in central banks, fiat as well. Although fiat with cash, it's decentralized. I mean, if you have cash in your hand, it is decentralized. They can't really control it. Okay, they can't really control it. That's why there is criminals. They money launder because they use cash, and they want to launder the money to get it back into the system. Bitcoin is extremely decentralized. No single entity, no single authority can actually control Bitcoin. So it is extremely decentralized. The network is spread into thousands of nodes all over the world. So yeah, it's extremely decentralized. Smart, programmable. Of course, gold is not smart. Fiat is not smart. Bitcoin is not as I mean, it's not as smart. It's not that much programmable compared to Ethereum, for example. But I would argue that that's a good thing, because if it's programmable too much, then people will, they will fuck with it too much. Just like Ethereum, they change their monetary policy every now and then. And I think that's a good thing. I would actually put moderate there, not high. Bitcoin is moderate when it comes to being smart and programmable. So yeah, I think this Bitcoin wins against gold. It wins against fiat money, obviously against the dollar. It wins against every other asset if we talk about investments. So yeah, Bitcoin is the ultimate form of sound money. Bitcoin is the hardest money the world has ever seen. And if you don't buy Bitcoin now, you will buy it later, but you will buy it. It's going to be way more expensive than it is now. You can still get it at a discount now. It's $84,000. You might never see this price again in the future. So yeah, go buy Bitcoin. Buy as many as you can, as little as you can. You don't have to buy a lot of quantities every month. If you can only buy like $20 or $50, $100, it's better than nothing. So yeah, get yourself some Bitcoin. And if you enjoyed this video, please subscribe to my channel. Leave a comment below. Let me know what you think. Send this video to a friend of yours. And see you in the next one. Take care.